I feel like I should stand for this next part, and perhaps it's the aura of the high top that makes me want to stand. By the way, I'm not sure what we did to deserve the high top treatment, Jim Fuchs, wherever you are. It was a great idea. Perhaps for next year you could serve this in like pint-sized glasses instead, and a different refreshment. It may provide even more lubrication for candid conversation. Who's got a question in the audience for one or all of these individuals? Yes, sir.
Okay, I'll stop saying my name and affiliation. I have a multiple choice question for the panel. The bright view and the dark view of traditional community banking. And I'm asking you to pick between the two and give me a reason why you think that view is more applicable. On the one hand, I look at the bleak view. I see continuing consolidation in the banking industry. I don't think anything's going to stop that. I see the new firms that are going into the market are not traditional community banks. They're not the de novo banks of the past that used to come in when consolidation happened, but they're the fintech firms and other firms like that. And so maybe the traditional model is dying out, bleak view. But on the positive view, I see, and I see this in this conference, I see this in my research, I see this in other people's research, there's a need for community banking that's not going to go away. The need is not going to go away because there are always going to be small businesses that need to get relationship loans. They're not going to have the balance sheets. They're not going to have the collateral. They're not going to have the credit scores to get a loan from a large bank or from a fintech firm. So on that side, I would say there's a bright future. They're going to continue, and it's been more than 20 years since the Regal-Neal Act, and there's still 1,000 community banks. So maybe they're going to survive. So I'd like anyone on the panel who's interested to say which side of this view or both views potentially correct.
So your multiple choice question, there's only two options, right? Bleak or sunny.
Yes.
Not bleak.
Bleak or sunny?
Incredibly sunny at kind of the macro level of every community, the whole entire community bank sector. I think there will be a lot of community banks for which the outcome is bleak because they do not embrace the kinds of change and actions they're going to need to take to be as successful as I think they can be. And there'll be a lot of community banks like Steve's that have decided they want to do something that they can be uniquely and powerfully good at, and they'll be successful. But at the overall sector level, very, very positive.
Ron?
And so I think there's a lot of great opportunity in this space. I do think there might be an opportunity to work collaboratively and share some of the technology infrastructure. I think about that a lot because in maintaining environments and then supporting security personnel and staff might not be something that a small bank can do alone, but together in a cooperative effort, I see that's something that they can do and pull off. And there's lots of providers that can provide them the services that they need. So smartly, I think it's sunny.
Great. Steve?
So I'm going to say bleak for many, brilliantly shiny for some, and that the future of community banking is not going to be a bank like my cute little branch. I love our little branch, Bonneville. The look of it is right when I was a kid, and the neon drive-through tellers and open, close, and all this stuff. It won't be that, okay? So I think if you think of the future of community banking, bright, but the bright community bank in the future may not even have a branch. It may not even have an office you walk into. It may exist only online, and your specialty may be, to use my analogy, soybean farmers, or it may be that your specialty is, automobile rims for manufacturing. I don't know, but it may not be a branch, but it'll be a community of people, if not a geography, and it'll exist online and in apps, but maybe not in person, and that would be my forecast for that.
Very good. Dr. Berger, I'm not on the panel, I'm merely the moderator, but with your permission, I'll also answer your question for you. I say sunny, and I say that because while the number of community banks in this country is declining and will continue to decline, I see our regulators have a real sense of importance and recognition for the unique value proposition community banks bring, ergo the reason for this conference that's being held. And while I don't think it's good public policy for our country to have fewer and fewer community banks, I have to admit, who doesn't want less competition? That's going to benefit me as time goes on. We were a de novo in 2007. I feel like we got in just as the gate closed behind us, and we're now in an industry with very high barriers to entry, and there's going to be fewer and fewer of us as time goes on. Yes, Julie.
This is the first time I've gotten to ask a question,
All right.
so I'm pretty excited about that. Someone asked too. And one, Alan, I'd like to build on yours a little bit, but you've talked about some of the traditional mechanisms for small business lending, but clearly Square Capital is starting to challenge that by using its Square customer payments data for its lending. So how do you see that beginning to build out, or will it build out in the future? Will we see more non-traditional data underwriting for lending? And then the other piece is cash. So I understand that you guys are partnering with Apple Pay. I am so waiting to get my person-to-person payment. I'm going to be the first one that uses it, I think. At least
Hope it works.
I'm really excited about that. I'm anxious to get rid of my last check. But having said all that, when you look at the array of person-to-person payments, both what's being offered by private banking organizations as well as Venmo and others, it's a little unclear how that rationalizes in the future. So I'd be interested to get your thoughts on that.
How,
It rationalizes.
yeah, but how exactly what rationalizes? You mean,
Well, will it rationalize? Will there be some standardization, or will we continue to have these pick your favorite type of person-to-person payment?
well, I think, look, I think like in everything, you have a million people coming into play. P2P, by the way, is not, nobody's making money today on P2P. I don't think Zelle makes money. We have P2P on all of our banking products and all of our apps, but it's a service that comes with the account. We don't charge for it. So whether it'll be successful versus how it monetizes are two unrelated things. We've been very public about that in our earnings calls and everything else. We have nothing baked into our model for the Apple Pay program. So I don't know that it rationalizes, but I think you'll have winners and losers like everything you do. And I think Zelle will be there because they have such massive backing and massive banks supporting it, so that'll be out there. I can't imagine anyone having a better chance than Apple because probably 80% of this room has an iPhone with them, and just like the rest of the country. So I think there'll be winners and losers, but I don't think there'll be a standard method. Is that what you're asking? Or?
Yeah, that, and will it have a meaningful impact on the use of cash?
Oh, well, listen, here's my, for disclosure, I'm a little bit of a Feddy. You've heard of foodies? I'm a Feddy. I'm on the board of the Federal Reserve District 12 in Los Angeles. I love the Federal Reserve. I think it's an amazing institution and does things that, unfortunately, most of the American public has no idea they do, which they should know because it's really important. And if you look at all the cash research that I've been able to see on that board, and I'm sure it's public elsewhere, cash is as big as it ever was and may in some ways be getting bigger. So I don't think anything replaces cash, but I do think it increases the speed at which you can purchase things, and for people who are accustomed to electronic movement of money, it makes things more convenient. I think that's all true. But the first thing we did when we landed in St. Louis was I went to tip the bag boy at the hotel, and I had no cash, and Christina had to go in the back of the hotel into the ATM and get cash. So there you go. You're always going to need cash. But maybe someday you'll say to the guy, "Can I zap you?" Maybe. I think he's still going to want the 10th spot, you know?
Right.
But no, I think cash is here as long as we'll all be alive in this room. It's just going to be differently used or used in other ways. But there's a certain emotional attachment to cash. And what was your second question? I'm sorry.
First was small business.
Small business lending and non-traditional lending.
Yeah. That's for you, I guess.
Okay. So I would challenge the question, the question in that I don't believe that data is non-traditional. I believe what's non-traditional is the ability to access it in a standardized, secure, verifiable way. So the big change here, notwithstanding the fact that people still use cash, is that 10 years ago, nobody paid for their lunch at a food truck. First of all, there were no food trucks, but nobody paid for their lunch with a food truck with anything but cash, and today it's largely debit cards and credit cards. That creates trackable flows of revenues for small businesses that can be incredibly powerful in underwriting. And at the same time, you're seeing basically what happened roughly 40 years ago in the consumer space. Don't beat up on Equifax, but with the consolidation of consumer credit data, the standardization of that data, and being able to track that over time. Same thing's happening in the small business space, which it's close right now to the point where you can create some pretty good FICO score type analogs, but certainly 5 years from now it'll be incredibly powerful. Firms like Square and others that have access to underlying flows that aren't going to be available in those business credit bureaus could well have an advantage, an information advantage. I think that's kind of still to be determined because it's too soon to tell how much detail you need in order to make a really, really good credit decision. Certainly more is better, but we'll see on that front.
Ron, anything you want to add?
I'll add on the cash question. So MasterCard sees cash as actually one of its biggest competitors. We do a lot to enable different kinds of payment flows, even person to person. We are actually the technology behind Facebook's, person to person payment device. There isn't a lot of money in that, but the more you can get people to get confident in making a payment from one person to another, the more likely they're to continue to use that same payment device for other transactions. And we've been doing a lot with India as India's monetary regulations to limit the cash in their environment. Those are things that we're helping them out. I don't know that will change a lot here in the U.S., but I do think the more you can make people comfortable with doing those interpersonal payments, it will continue as they go to do other forms of commerce.
That's the age of people, right? So again, for somebody like me, you're learning to, I can send you cash. If you're 15 today, you'll never know a different way.
Yeah.
Right? So I do think time will have a way of evolving that industry anyhow.
Good. Great questions, Julie. Thank you. Yes, sir.
I've got a question for you. So for the panel, Brian, you mentioned scale, and I do agree with you that in this day and age, in innovation, scale is much easier to come by. You can turn up an instance at Amazon Web Services, you can tighten down the security, and you can throttle based on the number of hits you're getting on that server, and you can scale as far as you want to go, and it's relatively cheap. And also we look at the availability of technologies, but the elephant in the room for community banks is core processors. We have legacy systems. What are
Everybody
we going
does.
to do?
Don't feel bad.
Yeah.
I don't
Yeah,
care if
we
you're
all do.
Chase, everybody does.
Yeah,
Are there any core processing representatives in the room?
yeah, but
Oh
this I thought it was just going to be the safest venue and to bring this up. But it's really a call from all of us as bankers. I'm a CEO of a presumptive savings bank. We're a $650 million bank in Vermont, New Hampshire. And what we need in order to compete as a community bank is we need freedom of choice. We need to be able to work with multiple providers and the best of breed technologies, and we need APIs, open APIs, so that we can move information data securely between systems so that we can select and work with the very best.
Yeah.
And so we always talk about all the things that we should be doing as community bankers, but we're not addressing the elephant in the room. So I'll throw this big loaded question to you. What do we do?
I'll take this one. if you want.
The answer is amen. Go ahead.
Hey, look, I don't care what the size of your institution is. Technology is a constant, I'll say something negative in a room this big. Challenge, how's that? It's a constant challenge. Look, even the best back-end processors are going to have legacy pieces to it. At Green Dot, we have 800 full-time technology people and even have 300 at our facility in Shanghai because we couldn't hire enough in the U.S. and California because Google and everyone steals them all. And we're a very prolific and productive technology shop. But man, it's hard. It is just, and when you start talking about open APIs or usable APIs at bank level security and that pass InfoSec requirements and that can withstand ethical hacks and all the things we do to try to beat up the systems, that's not a small job. And frankly, it's a job that I do think in 10 to 15 years, every standard processor, FIS and Fiserv and so on and so on, will have these things somehow powered with a connect the dots kind of a API that sort of moderate level talent technology people can write to. But it's got to be incredibly difficult to hire gourmet technologists at a community bank. I can't imagine the challenge. I know what we have to do, and we're fortunate to be a large public company. But it's got to be very, very tough, very, very tough. And so I think that it's not there yet, but there will be a time, I think, when writing to APIs and availing yourselves of the best of technology will be there. And I'm very close to, friendly with many of the CEOs of large processors, like Jeff Ibuki at Fiserv and and the folks at FIS, and they're all working on that. All of them see that as a need, and I do think that you'll see that kind of thing develop, but I understand it is not there today. It's really hard.
I just had two things. One is that the time frame at which you will have a really good spanking brand new core processing system that has all sorts of APIs, open architecture, is longer than you can imagine, right? Because it'll take them a long time to get there. There's some stuff happening in Europe that's pretty interesting, particularly in Spain, but that's going to take a long time here too. I wouldn't expect it anytime soon. Most of the things we've been able to do that have been successful have been kind of around the core processing system. So you basically plug the core processing system at the end. You don't rely on it to run the rails. And that seems to work really well because it doesn't make innovative delivery of a product or service to your customer contingent on whatever the core processing vendor can deliver today. You just got to be very careful about that intersection, the plugging intersection.
Well, it's also real easy to get wrong, and really scary stuff. So anytime you start leaving that environment, you open yourself up to outside threats and risks. And listen, it's my belief, you talk about Equifax or anyone else, and I'll leave what happened to the forensic experts. But I have a basic philosophy that I never used to feel this way, but that the world has become an evil place in many ways. I know that sounds negative, and for those who know me, I'm a very optimistic guy. But when we build a product or design a product, especially when it's with a large partner like an Apple or something else, I give my usual speech, which is we live in an evil world. And I don't want that evil guy using a green dot product to do something bad. So this thing better be locked down tight. And we actually do war games and dress rehearsals and all kinds of, and it drives people nuts, but it's that kind of rigor you have to do. So when you think about technology, it's not technology, it's what did that change you just made in the middle of the night that to you seemed like no big deal, that opened up a path to some whack job in somewhere else who now is compromising your bank or stealing money or funding a bomb somewhere. And I don't think we thought about that 20 years ago in the way we do today. So it's just, not to be a negative Nelly, but look, you know, it's a reality. We're dealing with money, and if you run an institution of size, I mean, how many denial of service attacks do you go through in a month? Good Lord, at MasterCard. I mean, I know how many thousands we do, right? So, well, we process in part on one of your platforms.
Yes.
So it's just a scary world, and so this technology thing is not just about technology, and the young technologists coming in and saying, well, gosh, Mr. Street, if we do this, it'll go 10 times faster. You're right, but, and then I give my evil world speech. So, anyhow, I just wanted to throw that out there because it's hard to do it at a bank. Now, if you were doing technology at some other kind of business, it's like, why not? The worst thing that happens is it breaks, right? If you want to try something new at Netflix, try it. Worst thing that happens is you can't download King of Thrones as quickly or something. But the world doesn't end. In banking, you have a different standard. So it is scary.
I would also add that, you know, even we strive, people strive to make things easier for others in deploying new applications and new technologies. If you think about the Internet of Things phenomenon, we want to quickly develop, you know, the light bulb that'll change colors, it'll match the mood of my heart and all that stuff. So here's the thing with it. While we're trying to make it easier and have people have more fun in life, we don't think about, well, what is the evil that can be done?
And most of these denial of service attacks are from that light bulb.
From the light bulb.
It's
yes.
all this, I don't know if you know that, it's all these damn refrigerators that tell you when your cheese is moldy that are blowing up bank servers all over the place.
And that's just a start, right? Denial of service is just the simplest form of attack. What else can they use it for?
The Target breach was because of thermostats.
Yeah. And there are no, today there are no laws or security protocols at all around that modern TV or nothing. You can do it, you can make your light bulb do whatever it wants, but I can write a program if I'm creative enough to do it, to make 8 million different light bulbs in refrigerators all call Chase and try to get a balance inquiry at once and melt down the whole system. So this is the world we live in. So much of your technology time isn't the technology, it's all the safeguards that build a lead wall around it. Is that what you find?
Yeah, people don't think enough about the evil side of what. I
do
made
the
this
speech.
great
I'll
cool
go there
thing.
I'll go to St. Louis at your headquarters and I'll give my evil speech.
And you need to have you need to wear like one of those little mustache things, yeah.
The more you guys talk, the more I think my outlook's moving from sunny to bleak in response to Alan's question. What other questions are there? Yes, sir. I'm not sure your microphone's on, sir. Okay.
Mike Watson from the Federal Reserve Bank of Boston. Question I have for you on change, maybe you can elaborate a little bit. From MasterCard, as we speak with different bankers, the level of intensity, the level of looking at change and where they may be differs between different banks. Maybe you could speak to the window of opportunity that you see community banks have. And maybe stay away from cash and stay away from core processing, possibly just focusing on product delivery. So essentially, can community bankers get behind, start the race slowly that they can't possibly catch up? So again, I'm trying to get at a window of opportunity. Is there a length of time that you're looking at?
I'm going to repeat this gentleman's question in case others in the room on the webcast couldn't hear it. He's with the Fed of Boston, and I'm going to distill your question to comment on the adoption of change you see amongst bankers unrelated to cash and data processing, but in other areas of their business.
And the window of change, you said, right? Like how long do they have?
What's the window of change?
Yeah.
Got it. Who wants to take that?
Listen, from my point of view, the window is it's there, but you got to move. If I were talking to a community bank of size that hadn't yet invested heavily in mobile apps and websites and all kinds of remote ways for customers to access their products and services, I would urge them to make that a pretty fast priority. Because every day somebody gets older and somebody gets born, and the technology pace just keeps moving faster and faster and faster. So I would say that. There's one thing that I want to say about community banks, which I should have said earlier, and we all think of it here because we take it for granted, but this is going to sound old-fashioned as heck. It's going to sound really corny. But I believe, and I know you all do too, no question you do, that a community bank should be a civic institution in your hometown. Any bank should, but in particular a community bank. My analogies when I give this talk to employees and others is like the church or the synagogue or the post office or the high school or give me another, the Kiwanis Club when I was a kid down the block. Whatever it might be, a bank should be a civic institution in your hometown. And if you do that, that's a pretty good way to differentiate yourself and to be there for your community. And many banks do a wonderful job of it. But as we talk about the internet and all these things, I don't want that to be lost in the discussion, because you can be a high-tech, not even high-tech, just modern, relevant, forget about high-tech, relevant institution in a modern day and be a community bank or a national bank. And it's not about a CRA plan or flying the flag out front, although I do advise you fly the flag out front. It's about making sure that you're behaving like a civic institution and taking your obligation personally, like in the old days they did. And I think if you do that, that's a big part of the competitive advantage.
I would say that I couldn't agree more that community banks do have this competitive advantage, and in a weird way, all this stuff that everybody's so focused on, technology, fintech, et cetera, at the end of the day will be a commodity, right? Just to be clear, nobody has a monopoly on a computer server, nobody has a monopoly on a mobile banking app. Customers will expect it, but as you hear here, and if you go through all the fintech companies, nobody's making money on peer-to-peer stuff or any of that kind of stuff. It's something that customers expect and demand and will be a commodity. And in a weird way, I think that underscores what I said earlier about the real potential power of community banking in a world in which things they didn't used to be able to access technology in an effective, efficient way. They can access now in a fair and level playing field kind of way, and they can deploy their competitive advantage as they see fit. In terms of the window of opportunity, it's not long. I don't know, it's a handful of years. But remember, it takes most banks, appropriately, a long time to implement whatever it is they decide to do. So if you think it's 3 to 5 years in terms of a window, and it takes a typical bank a year plus to get something done, that starts to give you a sense as to why the risks of inaction, in my view, are so severe right now for community banks, that failing to be able to kind of keep up with the Joneses on those things that will become commodities but are still important could really be a problem, and succeeding against it could transform your business in ways that are, and your community in ways that are really spectacular.
And I think you should also think about it in terms of change. It's here and it'll be constant, right? I plan this monolithic change and I'll be all set in 3 years once I get done with it. Well, you'll have to change again. There's always going to be new and different things that are coming. So you have to create your way in such a way that you're flexible and you're not particularly bound to any one thing forever, because that thing might be going away and you'll have to migrate to the next thing. You need to be agile with those things that
The
come up.
mindset of being relevant. You have to be obsessed with being relevant, whatever relevant may mean. 30 years ago, it was a selectric typewriter, and now it may be a mobile app. It doesn't really matter. To your point, it's always evolving. But if you're a community bank that is focused on being relevant on a specific niche that you think you can be successful at for whatever reason, I think you have a wonderful opportunity, right?
Great. In our remaining 3 minutes, we have time for one more question. Who's got it? Yes, Tim.
Hi, Tim Yeager from the University of Arkansas. And to follow up really on your last discussion, what is the next tech thing coming to community banks?
Replacing the neon drive-through. The Mosler camera's got to go. What do you all?
I mean, the implication of the question is that these things come one at a time, right? In a sense that there'll be one development and then another development and then another one. I think it's all happening kind of simultaneously. And to Ron's point, whatever we think the Venmo of today is will be very different 2 years from now and all those kinds of things. I think the more important decision for community banks is not to try and pick which trend they want to pursue. It's to try and decide what they want to be successful at, what they want to be distinctively good at in and for their communities, and to figure out what tools are out there, what tools in the form of technology, what tools in the form of partnership, what tools in the form of people they need to have in place to be able to fulfill that. So I think the answer probably is as diverse as the number of community banks there are.
Well, with the minute and 30 left, what I'm going to say about the future of cybersecurity, an area that I'm focused in and a number of chief information securities are focused on are integrated adaptive cyber defenses. Those are where we're including artificial intelligence or learning on how to respond. The NSA and the Johns Hopkins Advanced Physics Lab have worked together, and a few of us are working with them now. And what these systems will do, they've proven that they can execute response times in 1/100th of what it takes to respond to something now. So in like just like a phishing attack, for example, if it takes my team essentially 12 hours to analyze, get the response in, do all the cleanup, and then get the malware over for analysis, we believe we can get the machines to do that same work within minutes, thereby freeing up my analysts to do more significant or greater value work. So I'd say there are things that are coming in. It might give us at least a short-term advantage over the adversary.
Great. We're going to end on that note. Gentlemen, very interesting and insightful conversation. Thank you much. Please join me in thanking Brian Graham, Ron Green, and Steve Street.
Nice job, Ron.
Thank you.
Very good job. Nice job, Ron. Thanks, Steve. Yeah.
Thanks, Ron.